right, we're going over the strategies and portfolios to trade for Q4 2023. We are closing out Q3 today. We're up about plus 5.6% on the quarter. And so we're at quarterly equity peaks. We're off our intra-quarter equity peaks. We gave back over half of our gains. We had an equity peak back on August the 24th. And then the market became more brutal, and we stepped aside starting on September the 8th was our last trading day. And we've sat out this wild market volatility. Based on our experience, we've seen this before, and so we stepped aside, and this market's been crazy. So we're happy to be at quarterly equity peaks, even though we've given back some of the intra-quarter highs. And we are looking at the strategies to trade for Q4 going forward. This is for those in the Capstone portfolio subscriptions, or if you're having it traded for you. If you want it to trade this or have it traded for you, this is the last day to get all three of these portfolios. After today, there will be separate subscriptions, and so I want to go over each one of those. And so the first subscription that we have is the Stock Index Portfolio 37, which includes about 17 S&P strategies and 20 NASDAQ strategies. And so this is what we're showing here. I'm going to go over these quickly. It's going to be a more brief video. We're not going to go into this exhaustively, but 17 S&P strategies, 20 NASDAQ strategies. It can be traded on the E-minis or the micros. And that is the first portfolio setup. This is the loaded portfolio version setup of this. And then we have the light version of this, which is the Stock Index Portfolio 11, which includes 11 strategies, 3 for the E-mini S&P and 8 for the NASDAQ Tick Pulse, Adaptive Moving Average, Tick Wave. These are the 8 NASDAQ strategies in the Stock Index Portfolio 11. So there's only 11, so it's a lighter version to get started with the quarter. And then there's the S&P Portfolio 21, which I'm favoring the S&P more than the NASDAQ. The NASDAQ is pretty sloppy and pretty difficult to trade. In general, the markets are more sloppy than they've been. We're on the cusp of a potential government shutdown as we go into Q4. So if it shuts down, the market could crash. And if it doesn't, it could rally as we go into Q4. And so it'd be interesting to see. It's hard to tell. A couple of extra bonuses on this as well. These strategies have done well. Parabolic VSD, VTNQ, and VSD Divergence. They're all in a little bit of a drawdown on their trend strategies for the NASDAQ. And then there's the FOMC Trader, which did not trade at the last FOMC meeting on September the 20th. So it did not trade. But this has one of those strategies that only trades on FOMC at 2 o'clock in the afternoon. Since 2021, it's worked well. And there's 17 trades in the last couple of years, but it only trades on FOMC. The sample size is small, and additionally, these could be added to the portfolio. I am going to potentially revise these. So if you have the Stock Index Portfolio, you could get an additional update to trade for trading starting on Monday. I want to show you some of the things I'm looking at. This is almost a 26-year back test with slippage and commission for the S&P futures Cobra 3. I have several different versions of Cobra 3 in this portfolio, and I started developing this strategy 20 years ago. So this is an old strategy. It trades 15-minute bars. There's a $600 profit target, $1,100 profit target, and a non-profit target version of these. And so going back, if you go back all the way to 1997, in November this will be 26 years, and so developed it about 18 years ago. In 2005, finished developing this. And so this is the setup. And in recent years, the average trade profit is higher. If you look at it, so in 2023, it's about $100 average trade profit. Same thing in 2021. 2022 had lower average trade profit, slightly lower. And then you can see the equity curve, how well it's done over the years. Also emphasize our point. May of 2009, equity peaks, and then not again until November of 2011. So a 2.5 year period where it was underwater. Another time period here And this is why we trade portfolios or strategies. So this is a good strategy, but what if you start trading it here and then you don't realize new equity peaks until 2 years later? That's about a 2-year gap right there. This is about a 2.5-year gap. This is a gap right here as well. But since about 2017, it's been pretty good. And so anything can happen though, and we like these time periods where it goes up, but when it doesn't, we have other strategies that do better in those type of market environments, and that's why we have our portfolios that trade differently. And so when you ask me to pick one strategy, I say, hey, cover 3 is a great strategy, but what if it starts to dip again for 2 years during this time period? So that's something that to consider if you select one strategy. And I wanted to share that back test with you. The point being is that a lot of these strategies that I've had for a long time are starting to work, and so we're looking at pre-pandemic patterns merging with the current market environment, and we could get a resurgence in the VIX if something happens, if there's a black swan event, and we get more post-pandemic price action, or the way we've been trading is more pre-pandemic. Here's SR counter trends, which I've had for many years, and this is the SR counter trend portfolio released on June 1st, 2020. After the pandemic, at the time in June, we didn't know what the future would really hold as far as the markets, and so this is a portfolio of SR counter trends, and you can see how it's done. And now it's starting to come back, but the one market that's really held this back is natural gas. And so if you take a look at this portfolio, you remove natural gas, you are at equity peaks. And so natural gas is not a major market. Crude oil and gold are more major markets. And so taking a look at this setup with crude oil and gold, it's made equity peaks. It's made a major bounce back since this time period, which was right at January 2023. So in 2023, the market's been more counter trend and traded more like pre-pandemic time periods. And so merging this type of portfolio, the SR counter trend portfolio, and with one of the stock index portfolios such as the S&P portfolio with 21 strategies, let's look at that. If you merge it with something like this or with one of the other stock index portfolios, you have here's the S&P portfolio, and it's strong more recently because we have strategies that are taking advantage of the current index levels, increase the stop losses. And if you take a look at merging this portfolio with an SR counter trend type portfolio, you get this set up. And so this is the SR counter trend portfolio I showed you with just S&P, NASDAQ, gold, crude oil, and silver, and did not include natural gas, soybeans, or coffee. And so it includes that with some S&P strategies. I've merged it with the stock index portfolio, E-mini 37 beta. I've removed about 3 NASDAQ strategies, 3 S&P strategies, and required it to only have market internals. And I've merged it with the SR counter trend portfolio. So some basic filters there on that, and this is what I'm looking at. I'll have the final setup for next quarter, and I want to make sure that we have a good portfolio to trade in our managed accounts, and also I'll have a stock index portfolio suggestion as well. But this is including commodity markets. This is beyond stock index portfolio. This is stock index portfolio with commodity markets, and so I really like to set up test back to 2008. And you see we're coming into the strongest time period, November, October. And if I include market internals, this looks good as well. But it's a lot more strategies, and it's a lot higher risk to worst case drawdown. The current risk to worst case drawdown through yesterday was $8,000. And this is 63 strategies. And the risk to worst case drawdown is $26,000, even though it's very consistent. It's a bigger portfolio, 63 strategies, requires more capital, and you could see how well it's done. October, November time frame, and also January through March on both versions. Coming into a very strong time period, and December not as much, but October, November, and January through March are some of the stronger time periods for some of these, and so I'm looking forward to that. And I wanted to give you that update. If you have not received the updates yet, you will be getting those today for the stock index portfolio subscribers, and I will have another message over the weekend on what we're trading for Q4 and the Q4 final results. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.